parts of this area. We have an era where the expectation of life grows faster than the capacity of adapting. Millions of persons this year reach age that would have seemed impossible in past ages. And thank you. One of the reasons is insurance. To deal with these challenges, virtually, we have Aldrita Gachaparia. He's the research chief of health and demography of Geneva's association, one of the most recognized voices about de- demographic issues, health and health. She wants us to reflect about the underwriter sector, about longevity and its contribution. Bienvenida.
Thank you very much, Coney, and hello, delegates. I am sorry that I cannot be there with you in person, but I'm very glad to join virtually. And so thank you again to the organizers for inviting me and for having me here. So as you may have heard already, I am Adrita Bhattacharya Craven, and I lead the health and demography work here at the Geneva Association. Perhaps I should also explain why I'm here today with you. We published a report called Longevity in Economy, which came out earlier this year. So a large part of what I'm going to present right now is going to be based on that report, which if you're interested in reading it or to find out more after I have spoken, it is available on the Geneva Association website and it's freely available. So I hope you enjoy reading it as much as we liked working on it. So let me go into the presentation. I only have a few slides and I'm hoping to spend about 15 to 20 minutes and then happy to take any questions from the audience. So before we delve deeper into the presentation, please allow me a few minutes to establish some fundamental concepts about why we are talking about longevity economy and not aging. I am sure you've heard quite a lot about aging. The story of human demography has changed significantly over the past 75 years. Once we had a very dominant concern about unchecked population growth around the world, and that concern has very much flipped now. Instead of a very rapid expansion of global population, we are actually going to shrink. We are still going to grow, but at a much, much slower pace, and we will peak to about 10.3 billion people around the 2080s, and obviously these are projections. And then we will start to potentially see a decline by towards the end of the century. And it won't come to you as any kind of surprise. There are two leading driving forces behind this. One is the lower fertility rate, which is around the world just above the replacement level of 2.1. In Switzerland, where I'm now, is about 1.29. And also increased life expectancy. So, reshaping population age structures. Again, you can see some of the averages, but also country-specific ones. So, averages sometimes hide the real story. So, I thought it would be interesting to have them both. So, again, you can see in this the European average and the Swiss average, but also. It's about 82 years for men in Switzerland and 86 years for women in Switzerland. And so there are also disaggregated figures that are starker than the country averages. And again, to give you an example, the share of people aged over 65 and over in Switzerland will increase from currently just under a fifth of the population to over a quarter of the population by 2055. And you can see again in the same for LATAM, the regional average versus Costa Rica, where you all are. And the point here is, as a result, our population pyramid which we have typically, referred to when talking about demography, is very much becoming a dome-shaped structure. It is changing our reality, our needs and vulnerabilities, as well as our economic behavior. So simply talking about aging no longer really captures this full picture, and we must be clearer in our definitions, what we mean by aging and what we mean by longevity. So here it goes. So for us, the way we looked at it while doing the research, aging is very much a biological process. It's a gradual decline in our physiological functions. And longevity, on the other hand, is effectively the length of time people live. A longevity society is one where a growing share of the population are reaching older ages, whereas longevity economy focuses on the ways goods and services are produced and consumed in such an economy, and how, as a result, industries, including insurers, need to shift their thinking. And in terms of rhetoric, there are also some differences. Discussions about aging tend to rely on a chronological age to predict economic and societal outcomes, and there are strong arguments against it by many economists who argue that a chronological age is a very poor measure of capability, productivity, or well-being. And it's easy to slip into a narrative of demographic doom, which we have often also seen, while still maintaining everything as the same as they are now. So effectively, to give you an example, if we maintain the status quo and have the longevity that we do in countries like China, people might end up spending 20 to 30 years in retirement. And that decumulation was initially designed for not 20 to 30 years, but perhaps most 10 years, perhaps even less than that. So it is really important, therefore, we shift our dynamic and have a better foundation in our thinking when we start talking about longevity versus aging. Notwithstanding the fact that the concepts are related. So why we are saying that? Because, thanks to medical advancements and better preventative healthcare, the relationship of chronological age, which we have tended to rely on, and biological age has become very, very flexible. So you can be quite old in your 70s and be very well, and you can be relatively young in your 30s and 40s and be quite unwell. And this is where longevity comes in, and this is where life and health insurers come in to enable people to do three things better to avert the risks associated with living longer. The first one being healthy for as long as possible. The second one is working for as long as possible. The second one, and the third one being remaining as independent as possible in that period. So before I go into the depths of the report, I'd like to sort of invite the conference to really think about longevity as not always aging, even though the concepts are related. With that, let's go into giving you a flavor of the report. So the next slide, please. Now let's look at what are the sort of typical biometric risks life and health insurers are dealing with, and how could this pan out in the context of this demographic shift. So on the left-hand side, you can see the different risks, the biometric risks that health and life insurers tend to manage. Most of them, I think, was worth pointing out, are living benefits, and not more. But there's only one which is really protecting against mortality. Most of them are actually the risks of, living and potentially now living till older ages. And now, in the middle of this, you can see some of the typical pathways for biometric risks to manifest themselves. And I took this from some research around claims, and again, knowing our audience, it wouldn't come to you as any surprise, but these are the typical pathways of the biometric risks manifesting itself. And on the right-hand side I took some of the statistics about what things are now around those pathways. So what could cancer look like? What does it look like now? And what economic inactivity, is happening as a result of chronic diseases. What kind of disability, benefits are we currently paying, and what might that look like now, in the future? What could diabetes look like? What could obesity look like, which is a major risk factor for many of the ailments we see in the world? And I suppose the reason for showing you these, and you can read this in your own time, is to show this is currently the status quo, and which doesn't bode that well. And doesn't bode that well for the populations, but also doesn't bode well for the sustainability of insurance in life and health insurance. So it's just something to bear in mind as to what it is now and what might that look like in the future. And let's try to imagine the future in the next slide then, which is where you see a population pyramid in this next slide. I'll just wait for the slide to come on before I talk. Perhaps it's a little bit of a time lag, but perfect. Thank you very much. So what I want to say here is that you can see the population pyramid, which is typically how demographers and everybody has been looking at it. And now you can see over the years how that might turn into a dome, which I have referred to right at the outset of this conversation. And to think about this epidemiological trend, the disease trends that we see, if they are not arrested, it's going to get worse when it comes to most of those biometric risks. And it will also become top heavy as the bottom of the pyramid will start to taper, and is starting to taper. And this is very much the case for most of the world, and most likely, given where the population age structures are heading, the top is where most of the insurance customers are going to be. So, there's something to think about in terms of how we are locked into an economic and a social construct here. Also, as insurers, how we do our business models, that's stuck in a population pyramid mode, whereas we really need to start thinking about how we adjust to the dome, where most of the customers are increasingly going to move towards the top of this so-called pyramid. And so innovation is absolutely necessary, so you can harness that longevity economy. And that means unlocking the emerging needs, assets, and consumption patterns of older adults now, and also prepare them for the future. And so that goes back to the three basic functions and the opportunities that I also mentioned, being healthy, working longer, and living longer independently for as long as possible. So in the next slide, thank you. I quickly outline what we set out to do in the report. We did three things. We did a survey of about 15,000 people across 12 countries. We also did a literature review to complement that, and also spoke to quite a number of people just to really obtain some very tacit knowledge. And to help us think through a framework, which you see in the middle of the slide. It has got three components: lifespan, health span, and wealth span. We are very familiar with lifespan, and that's where the conversation tends to happen about aging and longevity. But there is merit in thinking of these things together. And why we say that, and as you can see at the moment, the three bars of lifespan, wealth span, and health span are very, very misaligned. Roughly speaking, in OECD countries, we are talking about living till about 81 years. And we live healthily for about 64 years. And we work for about 40 years or so, roughly, taking the global average. And the red shadowed areas are the areas of potential risks that could destabilize these bars even more or misalign them even more, and potentially exacerbate the risks of, denting the accumulation and decumulation phases of our lives even more. And we use this concept to really understand how can these three bars catch up with each other as much as possible in this new reality that we see. And in that, what is the role that insurance can play in mitigating the risks, and what are the levers are there to help them align these bars as much as possible? And that was effectively the conceptual framework. Let me give you a flavor of the high-level findings from the survey that we did in the next slide. Thank you. So the first thing to point out is which is very interesting in my view, is that low and middle income countries are much more optimistic about the expectation about how long they were going to live compared to high income countries. This is particularly interesting for Brazil. It stood out about how optimistic people were, the respondents were from the survey. But so was China and India, where the outlook was much more positive. Wouldn't come to you as any surprise. The second big finding there was a noticeable disconnect between people's awareness about their longer lives and their perceived preparedness for their longer lives. And that was the case for most of the countries. The only interesting exception was actually South Korea, which stood out from the crowd. And there's an interesting dynamic here. As you may know, South Korea has got one of the lowest fertility rates in the world. In fact, it is the lowest. And it's a super aging society where this response may well make sense, particularly in health and decumulation phases of our life, where they are seeing a huge portion of the population actually moving towards aging, and the system is not quite ready to cope. That was the general sentiment of respondents from South Korea. So that could be an explanation about why we heard that. The other last two, in the last two messages, they're very insurance specific. We asked how, amongst all other institutions, insurance is perceived to prepare for longevity. And one good news that we have for the industry is that insurance is perceived as an important tool to help people protect and manage longer lives. But then the fourth point becomes even more interesting, which is what I want to particularly highlight, is that people's desire to remain independent. They want insurance to actually enable them to mitigate the risk rather than just indemnifying the risk. And there is a message there in terms of how products can evolve towards more prevention and risk mitigation as opposed to indemnifying losses. And once the loss has happened, what do you do in the context of longevity, considering some of the trends that we are seeing? And it becomes expensive and unsustainable, potentially. And to qualify these points, I just have two graphs for you to see just in the next slide, if you wouldn't mind showing that. Thank you. So let's see that slide to come on. Thank you. So in the first slide is the pointer I made around, seeing insurance as a vital tool. And as you can see, the top chart shows you that, with China being one of the, countries where the respondents strongly felt that insurance had a very strong role to play amongst other institutions. And the second chart below really shows this desire for independence and wanting, most institutions, including insurance.
Y la mayoría de instituciones quieren que ayudemos a las personas directamente a tener una
life for knowing that they're going to live longer. I think that there is a sort of some important messages there. For policymakers as well as for the insurance industry. With that, let's move on to some of the concluding slides. Thank you. Great, thank you. So in terms of where we ended and what we think would be necessary, we mapped this against the original framework that I had just shared earlier. The headlines here really, again, is the success of insurance in tackling longevity and moving and being prepared for a longevity economy is really trying to see how we can move away a little from traditional and often what we call the bifurcated approaches to health and life, and accumulation and decumulation. The fact of the matter is, they are very, very interdependent, and you will have seen that from some of the statistic I had presented earlier about people not being able to work for and they go into millions, even in developed countries with very advanced health systems, about not being able to work purely because they have a chronic illness and completely jeopardizing their potential for accumulation. So these things need to be looked together rather than in isolation from each other. And the future very much may lie in new and also repurposed products across health and life, in operating at the intersection of these elements of health span and wealth span to have a more productive lifespan. And that requires attention to both the demand and the supply side factors, as well as policy paths that can help them make them a bit more mutually reinforcing. And I won't go into the granular details because, again, as I say, if you are interested, the report is readily available and for you to download and dig deeper if you wish. But in the interest of time, I will highlight one or two examples across health and lifespan about some of the innovations that are already taking place. So the question is, how do we scale up? And what kind of policy environment we need in order to scale them up? So those are questions. We don't have quick answers, but perhaps I can leave the conference with those food for thought. So in the next slide, I highlight the wealth span and some of the examples that are out there. I probably should highlight one example. I was recently in Singapore, and so I learned quite a lot about how the country is advancing, and it is very impressive when it comes to some of the policies that are being put in place for longevity. But there's also realization that insurers need to, offer products that are very, very different. And one of the things we put out in the report is actually making savings very easy and flexible and bite-sized. So in Singapore, they have a program called SNAC, which some of you may know, and it's a digital micro-insurance platform for millennials, that builds coverage in small amounts through everyday things, everyday activities. So it is helping to make savings very flexible, and each time basically the policyholder shops with a partner brand or completes some sort of a lifestyle activity, a micro policy is issued for a life insurance or an income or accident cover. So you're talking about slow build-ups, and rather than the traditional way where people will have to accumulate or have quite a lot of money left in order to think about this in the first place. So that's one example. And in my final slide, let me give you an example of what that might look like for health span. Last slide, please. Thank you very much. So here, one interesting thought here is, we are no longer just dying. We are living longer with non-communicable diseases, and those non-communicable diseases cannot be treated in a year. It did require investment and product design that need long-term investment, that need multi-year cycles. Yet, typically, if you think about health insurance, it's an annual cycle in most cases. Sometimes group plan go, on for a couple of years, perhaps. But there are emerging examples where, especially in India, where we are starting to see multi-year health insurance. The primary reason right now is to lock in premiums. When we were doing the research and thinking through some of the pros and cons of this, we think there's merit to think about this more broadly rather than just about locking premiums, to how do you make the most and optimize the health outcome for the policyholder. And we also thought it would be a good idea to actually think about this in the group plan context, where it might be a bit more challenging in retail plans, but in group plans you may already have some multi-year contracts. And there are some technical hurdles to jump here, that's for sure, and policy hurdles to jump here. But it is also very hard to see, how you will tackle and de-risk health span if you don't think about this multi-year cycle. You cannot solve diabetes in a year. And that is increasingly going to be the case because of the epidemiological trend. So the question is, how do you prevent? how do you also enable people to recover? It is possible to recover from diabetes too, particularly, but it takes time. So there's some food for thought, and perhaps a food for thought because we cannot not do this just because of the technical and the policy difficulties that we might experience. Because logically this makes a lot of sense, but then how do we do it? That's a food for thought. And the other interesting one I also want to highlight is towards the end of our lives, care needs are going to look more and more certain. What will be uncertain is the length of care, length of time we will need care for. And that's going to affect people who will both need the care, but also who will be caring, because there's going to be an element of imbalance we have typically seen where the number of care receivers may outnumber the caregivers. So increasingly, there are some budding examples of insurance products actually looking at carer needs, people who will have to plan caring needs for their elders without completely jeopardizing their accumulation phases, because a lot of people also cannot work or have to make arrangements or compromise potentially their decumulation phases, which creates a problem further down the line. And so there's some interesting thinking that's going on, not just focusing products on care receivers, but also caregivers. Again, I won't go into the detail because I know that you have had long conversations on panels before, and you're a little bit behind time. But let me leave you with these thoughts and hand you back to Connie. And Connie, I'm happy to take any questions if there is any. Thank you.
Thank you very much for sharing such an insightful perspective on the future of protection and aging. Es Adrita Bhattacharya Craven, directora de investigación en salud y demografía.
Director of Health and Demography in the association in Geneva. And applause for her, please. She hears it all the way over there.